Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Thursday, July 6th. We are coming up towards the end of the week and first week of the month and quarter, that is. I would be remiss if I did not start with this data today, considering we ended yesterday's session with this, and it's going to pertain to some of the price action that we experienced this morning. But remember, we talked about how unemployment data comes out tomorrow morning, which will be critical because we don't have too many more data prints before the next FOMC meeting on the last week of July. Well, I don't know if it's the last week, but it's like the 25, 26, so close to the last week. And we mentioned that, ADP employment is typically a precursor to this data. And if you notice by the numbers, it was projected to come in at 220K jobs. They actually added nearly 500,000 jobs. So more than doubled what was expected for the employment numbers, which I would assume is likely going to contribute to a 3.6% unemployment rate tomorrow, which is a drop. And now a drop is good, economically. But again, the Fed wants to increase unemployment to help decrease inflation. So unemployment coming down doesn't bode well for the other side of the equation. Therefore, we could see more downside tomorrow, depending on what this number. Like if this number is 3.5%, we're definitely going to see more downside. If it comes in at expected, we of course already got a drop from this number, but I wouldn't expect too much bullishness if it comes in at 3.6 or lower. So that likely explains why we had a big spike in DXY. And as you can see here, that wick was all the way up to 103.57, which our magic number was 103.6. And of course, this jump coincided with a steep drop from equities and Bitcoin as well after a kind of a little scam pump there. So looking at DXY, we obviously getting sold off pretty heavily today, but it's still holding above that 12-hour estimated 200 moving average. This is still this gross little range that we've been sitting in for quite some time, but clearly it's getting closer to breaking out or breaking lower. I will say this double top right here doesn't bode too well, but this formation right here is certainly not bearish yet. It does have a big doji, but this can sometimes push higher. It's not the most trustworthy candle formation. So I would wait for this to fully close. But again, we have the unemployment number tomorrow. So, we kind of expect what will happen if unemployment comes in lower. This will probably spike. Equities and crypto would probably drop a little bit. But how that, if a DXY still stays under 103.6 after that tomorrow, and it moves lower towards, this area of the range, then maybe we have, a quick drop in risk markets and then a quick buyback. So that's something to also consider. We've been, got beaten up pretty good this week after, a few bullish weeks. So I'm not very bearish yet, but I do recognize that a pause is likely. We may have some flat volatility, meaning we don't really break the highs. We don't, break the lows. We kind of stay near the highs, but we just chop around in a really ugly fashion. So I think that's more likely than not. And that's kind of explained by DXY, especially if we continue to kind of just pop around here. Again, a break higher would be bearish and a breakdown here would be bullish. So just something to consider moving forward. Looking at equities, I'm going to try and zoom out a little bit for you. The moral of the story here is, and I'll zoom out to the 4 hour. We talk about this a lot. And anytime this happens, I'm usually looking for shorts. Equal highs, let's move this out of here. Equal highs tagged, no follow through, typically will lead to a breakdown. Now, if we're talking about this breakdown, let's get our trend going here. So this trend is still valid. This trend looks like it's kind of breaking down a little bit, but it's still holding. So this is kind of like a little demand zone here. So if we can survive this trend right here, the lower one, things are still intact. Ideally, you survive this trend, which is obviously trying to do. Tweezer bottoms, nice little doji, swept the liquidity down low and is recovering now this 4440 level. A lot of fours in that number. So 4440 is the line in the sand for this range up here. So if you can close above that, then maybe you start kind of just following this trend and moving higher. Now you could drop again, and I'll get rid of these. You could drop back down to sweep this liquidity again, and then you tag this level and then you move higher. So let's say, equities are, we have a really bad morning tomorrow in terms of unemployment. Let's say we creep a little bit higher, we tag the VWAP, and then I'm gonna get rid of these lines just to make it easier for you. And then we tag this VWAP by tomorrow morning. Unemployment comes in bad. We drop back down, sweep this liquidity, get a bunch of bears in right here, and then ruin all their fun heading into the weekend. Or maybe we stall here Friday and we rise up on Monday. So something to consider, just different types of price action you may see. Of course, these are the highs that we need to break above to move higher. So that's your resistance. You have resistance currently at 44.40, which could turn into support depending on how the next couple of hours close. If you close below 44.40, your first stop is definitely going to be this liquidity here. Lose this liquidity, then you're going to drop down here and meet this low right here, which also coincides with the 4-hour estimated 200 moving average. So something to keep in mind there. And then, of course, if you hold this level, then you would likely return back to 44.40 or probably at least this level before making a further decision. So considering we already got a dump, I never recommend jumping into any trades after a big volatile moment. So your best bet is likely to just wait for this price action to follow through. Remember, we've got these two trends. If this trend gets rejected, we're going to head down to this trend. If this trend gets accepted, which, we have the 1-hour estimated 200 moving average here. So if we can get above 44.50, then, that's a really good target right there to break above to then end up moving higher up to this liquidity. And then, of course, if you get rejected here, at this level, then, where we're headed, probably back down here to meet this trend and then make another decision on higher or lower from this trend. So looking at Bitcoin, there's not going to be too big of a difference here. Obviously having a little bit weaker of a reaction near the lows. But the moral of the story that we needed to break above is 30.20 or 30.2, not 30.20, $30,200. And as you can see here, that's where both of these hourlies close, is literally right at that level that I told the TTC community this morning. And if you get the emails, we have the community and we have emails that we send. So if you're not on Discord and you're, more of a email person, then we send the information out to you. So above 30.2, we figured 30.5 was the next step. That obviously already played through. Now below, if we close below 30.2, probably going to head down to 29.8, maybe 29.5. And so that's something to consider. This wick right here could be, the next set of lows, but it is important to call out. We do have the lows right here from previous weeks. So this is this week's low. This is not this entire week's low, but it's the low from after it, broke above the 29.5 level. So this is kind of this will be the first support level, which was also marked here. So if we do drop lower than 29.5 is the critical line in the sand for the bull trend to remain intact. So for the bulls, since we already tagged 30.5 and we're holding above 30.2, you want to, of course, stay above 30.2, but you need to get above 30.5 to then move back higher towards 31. And of course, you should always watch out for that weekly VWAP that's hovering around 30.7, 30.8. That's obviously could be first resistance if we break above 30.5. So get above 30.5, target this area first, then target this area second. And of course, if we break below 30.2, you target this area first, you target 29.7 second, and then you target 29.5 third. And a break below that would be pretty bad for the bulls in the short term. So looking at ETH, as we can see, not much has changed from the ETH BTC chart that we talked about yesterday. Still hovering near these lows, needs to hold these lows and move higher, which is, again, if you listened to me yesterday, I was not recommending jumping into ETH because we were sitting around the lows. We could still drop lower and tag this and possibly end up lower. We could hold this level and move back higher. But I want to see this level broken, preferably 0.065 broken before I start trading Ethereum, thinking it's going to be more bullish than Bitcoin. So looking at the ETH chart, well, let's go back to the hourly, get a bit clearer view. We'll say chart, not looking too much better than Bitcoin, just to make the comparison. Bitcoin, of course, had that spike up to the previous daily close. ETH could not make it back up to the previous daily close, could barely make it back up to 1900. So further demonstrating possible weakness. So ETH needed to hold above. I think my number this morning was 1875 due to actually let's see exactly what my number was. I'll go ahead and pull it up and share it for everybody. Don't always remember everything, but as you can see here, hold 30.2 for Bitcoin. So yeah, 1875 was the number. So 1875 was right down here, which, right around the previous week's VWAP. A lot of liquidity sitting in 1875 level right here. A lot of wicks down here. So figured that would be a good level. We obviously, 1880 was the bottom of these candle bodies. And 1873 was the low for the follow-up candle. So we are holding above 1875. And as long as we hold above 1875, the first target is 1900. And then the second target would be the previous daily close at 1910. And then the third target would be 1930, which is, of course, been that previous resistance dating back to very early July. So, and then of course, if we break below 1875, I'd say, at this point, 1880, I think is probably a better number just because of those candle bodies. But if we break below 1880, let's go ahead and draw some more lines for you. Then we will drop down to this liquidity meet, right around here, kind of the same level, 1860, 1865, not too big of a difference. But obviously break down this level, then you are going to meet this liquidity down here. And just to do that same exercise with Bitcoin. Now, it's not exactly the same because ETH has been a lot more volatile. And let's go ahead. Let's actually zoom out to the 4 hour and make it a little more clear for everybody. So ETH has been a lot more volatile and difficult. And, let's look at the Bitcoin 4 hour. Apologies for these, drawings or whatever. Sorry, couldn't get that out of my mouth. But this is a very clear range, right? We got 31K holding us up, and holding us back, and we got 29.5K holding us up. Now for ETH, we've got, the 1830 levels doing a pretty good job holding us up, and obviously 1975, really 1930 is doing a really good job holding us back. So in terms of this range, if we drop below, the 1860 level and drop to 1830, that's really the last critical level to hold for this range. Because, really the range is 1860 to 1930, but we've obviously got some deviations, and we got to respect that these are kind of other ranges within the larger range. So 1830 is my line in the sand, as I've told the TTC community a lot, talked about this on the B3 radio show. So you definitely do not want to see it down here. But I will say these tweezers right now look pretty decent. So I'm not very bearish. Anytime we see a large spike, I'm never shorting into that. Or anytime we see a big, boost, sometimes I'll long into that, sometimes it works. But anytime there's a big move, just, curse yourself, you missed it, walk away, be patient, take a deep breath. Never want to just start jumping into shorts because you woke up and price is down 5%. That rarely ever works out for anybody. So I will say I'm not very bullish, but 4 hours looking decent. Still a couple hours left till the close. ETH is definitely looking weaker than Bitcoin. Bitcoin definitely trying to make its way back, and I think it'll fight the good fight throughout the U.S. session. Remember, equities are obviously trying to power through, but remember, equities, are at their, right around their resistance level. Bitcoin is right around its resistance level, as is ETH. So I'm not placing any longs right now. I'm actually completely flat on trades. I don't have anything right now. And I will be waiting patiently, probably just going to wait to see how the daily closes, how Asia reacts to this unemployment data, and then see if we get any preliminary indication on unemployment data tomorrow. So if I had to guess, if you really had to put a gun to my head and say, Nick, put a trade down heading into tomorrow, I'd probably short the local highs from this morning, meaning if we get back up to 30.5, I'd probably short that. But, something in my gut's telling me to just be patient. We could just crab around this area and do something similar to what we did last night. And then maybe a further dump, so I'm not going to trade it right now. I know what I want to see tomorrow. And if we get that, then I'll hop into some shorts or, play the reverse trade if we get a strong reaction, meaning, and I've talked about this a lot, if we drop down to 29.5 and then we can immediately get back I'm sorry, if we immediately drop down to 29.5 and then get bought back, there we go, to 29.8, and we close above 29.8 on like the hourly or whatever, I'm probably going to dive in because I would expect something very similar to this. You know, anytime you sweep the lows and you have a strong buyback, especially, you know, above the hourly estimated 200 moving average, that's a really good long opportunity. So if we do something, you know, we had a bit similar today, but we didn't sweep these lows, which doesn't make me too confident. So if we sweep these lows, close back above 29.8, preferably 30K, very similar to what happened here, I'm adding longs. If we drop below 29.8, see no reaction around 29.5, then I'll probably hold shorts lower. And you know, this is hoping that we get up, you know, a little bit higher for more shorts. But if I miss it, I miss it. You know, we've already dropped a good bit, and you know, it could be several hours till we see another drop or rise again. So I'm going to be patient to the daily close. It typically works out better that way instead of jumping in towards the end of the US session. So good luck. Happy trading. See everybody tomorrow.